Hello, I'm Stephen Galpin and welcome to Property Question Time. This is a show where you can have your property related questions answered by our team of property experts. And joining me today are Byron Crellin, CEO of Clearway Debt Squared Commercial Property. How are you, Byron?
All right, thank you.
Good trip down, I hope.
No train cancellations, so all good.
That's all good news then. And joining Byron is Noah Laguda, founder of Noahsure Real Estate. Welcome to you, Noah.
Thank you, Stephen.
I think this is your second time back now, isn't it?
It is indeed,
So,
yeah.
Good.
It is, yeah.
Nice to see you.
Thanks.
I know you don't have too far to travel.
No,
Okay.
just a few floors.
Okay. Noah, you're going to go first with the questioning, and your first question is this. Do the panel think that the current low value of the British pound will attract more new investment in the UK property market, or is the publicity surrounding the cost of living crisis deterring those overseas purchasers?
I mean, from our end, we're still getting a lot of inquiries for properties over here from overseas investors. And that for me obviously means they're sensing an opportunity for them in that sense. Of course, these are high net worth and, so they're not sort of looking essentially to come and maybe live, but looking for properties that they can, rent out for investment purposes and things of that nature. And what I've also found is the cost of living tends not to scare the high net worth in that sense, because they've obviously put, contingencies in place for
Well, they
things
can take a
like
longer
this.
view too, can't they?
Yes, indeed, they do. They can see past, the waves and things. And so from our perspective, I still do see overseas investors still wanting to take advantage, especially when the pound is not as strong as it has been. And so this is, an advantageous period, I'd say, for certain overseas investors.
Yeah, I would also, I would think that the Americans must be looking very favourably at us.
Most definitely.
The pound, well, the dollar is sort of on parity now with the euro, isn't it?
Yeah, it is indeed.
So that must make Americans think UK is a pretty good deal at the moment.
Indeed it does. And this is what we're seeing, to be honest. And obviously us here, feeling the pinch in a way, the cost of living and stuff. But others out there are looking at this as an opportunity. And as I said, with the high net worth and, certain individuals that are very smart, they look at these opportunities as a period to make a move, and I see that's what's happening.
We always see a lot of publicity about the shortage of housing in the UK. Do you think these current troubles will stall developers?
Me personally, I don't necessarily think it will stall developers. Of course, there might be certain fractions and things that might make it difficult more than ever in terms of interest rates and things of that nature from a lending standpoint. But in terms of the appetite for developers, I guess they've got a different type of mindset, and I doubt that this would stop or decrease the flow of developments, in my opinion.
But I can see trouble around the corner coming with the cost of development. I mean, building materials are rocketing up, aren't they?
I think
mainly
those are the
through
things.
Transport costs.
Yes, indeed.
And energy costs.
Yes, indeed.
I think that's going to cause the need to have a look at one's lending, if borrowing, if you're a developer.
I totally agree, and I see that as probably mainly the issue in that sense. Materials and lending criterias and things of that nature might make it a little bit more difficult, but the savvy developer will always find a way around it, and there are a fair few.
How's confidence in the commercial markets, Byron?
Bleak. I think we know what our landscape looked like coming out of COVID. I think by the end of this year, cost of living crisis, we're going to see further.
It's blown all the calculations,
properties.
hasn't it?
Yeah, I mean we track data in terms of business, in terms of scoring risk on behalf of clients managing portfolios, so we can alert them to the potential of default and distress, etc. But yeah, I mean it's just impossible to try and work out and get some kind of trend rate that says, well, this is what the UK looks like in retail, etc. I mean, about developers. One of the biggest areas of risk is construction, in terms of construction businesses going down.
Yeah.
But on top of that, we've got a lot of commercial investment companies who took out huge bounce back loans and the like. It's now time to pay all those loans back. The only one trouble is we haven't bounced back yet, have we? That's
the biggest unsecured commercial debtor is the landlord, the commercial landlord.
Oh well, fingers crossed then.
I should be wearing black.
Okay. Well, on that happy note, we'll go to your question, Byron. Corporate insolvencies rose sharply in England and Wales in the second quarter of this year, according to official data. Voluntary liquidations reached their highest quarterly level since 1960. Do the panel believe this is an expected trend, and how will it affect the property industry or market?
I think we expected it, and I think the key thing there is we talked about, you mentioned voluntary, and that's, I mean, we saw in the first year of the pandemic in Q4 the biggest increase of companies being created at Companies House, which was a bit sort of pandemic. And this wasn't businesses that were creating, manufacturing, face masks or anything like that. This was individuals that were.
I thought it was the local pub that did that. No?
Well, and this is businesses that are the expression pre-pack, where basically are looking at their debt, drop the company, go again. And we had a client recently contact us, retailer, 25,000 in arrears rent, appears to have stopped trading, but is next door but one now operating out of a new unit, different landlord, different name above the door, same individual, same stock, well, similar stock, same trade. What can I do? I said, well, have you got a personal guarantor on them? No. Nothing.
Byron, this where you have liquidations or insolvencies, this packaging, is it totally legal? I mean, I know it's a practice that's been in play for a number of years now, but it always seems to me a fine line as to whether it's legitimate or whether it is almost fraud to a degree.
Yeah, well, I mean, the government are very strict in terms of, and insolvency practitioners have to be whiter than white in terms of the process.
It's insolvency practitioners that create these packages, isn't it?
Well, ambulance chasers is an expression. We work with insolvency practitioners, so I'm not going to be derogative, but when you're in a situation, and there's over 600,000 businesses in financial distress, and that's today. That's a stat. And of that, we would expect within 6 months those businesses to be in some form of insolvency. Now, a company director, unless it's a compulsory liquidation, it's the directors that will appoint the insolvency practitioner. So if we go back to, I'm from the commercial sector, so you've got a commercial landlord here that's had pain since March 2020 because of COVID, and has been negotiating rent recovery. Fast forward now that we're coming out of that sort of process and we're sort of getting back to business as such, landlords have been negotiating without any sort of powers. When a company goes into a form of insolvency, not compulsory, that'll be through a court process. So where a director is electing to put the company through some form of insolvency, when the insolvency practitioner is appointed, if the IP decides that business can carry on trading, the insolvency practitioner at that point, who is the officer of that business, is responsible on behalf of the company to pay the rent. But any rent arrears that accrued up to and before their appointment are stayed. The landlord can't take action against the business because it's now a form of an insolvency piece. So the insolvency practitioner sort of sit in the chair by going, okay, so can't really afford the rent going forward, so I'll do you a deal, Stephen. I'll pay you X in the pound. In terms of the arrears, you're probably going to have to take a hit. And the IP,
a total hit?
Well, I mean, every case is unique, but the IP will look at what's best for the company, not necessarily what's best for the landlord. And I'm not being unprofessional by saying the insolvency practitioner is, leaving the landlord out there high and dry. Sometimes we see it as it's a renegotiation. This business can be saved, but the unit's too big, so we need to downsize it. We want to stay on the portfolio with you, Mr. Landlord. You've been great. We'll do you an exercise on a pence in the pound for the arrears as well. So that's not uncommon. But in terms of over 600,000 businesses in financial distress, they will be insolvent by the end of this year. So start the show and the question, you asked Noah and then you came to me. The landscape of what this UK commercial portfolio looks like across the UK, by the end of this year, there's a lot of pain to come. Not good.
I think the hard fact is, if anybody thinks this is going to be over quickly, they're
Well,
on the
we were in
rocker
a
with that one.
pandemic. Q2, pandemic 2021. Q2 this year, 37% increase on debt.
Okay, well, on that happy note, we're going to go to a break now. So join me again after the break when we'll be asking Byron and Noah more of your questions. Hello and welcome back. I'm Stephen Galpin. This is part 2 of Property Question Time, and I'm joined by Noah Laguda and Byron Crellin. Welcome back, guys. Noah, your second question.
Yes.
Property investment in and across Europe has been popular for many years now, and I wonder if it would be worthwhile now looking at a little further afield to where I accept investment risk may be higher, but where one could be rewarded with much higher returns. Any advice, please?
Yeah, I think I touched on this briefly on the last show I was on in regards to overseas investment in real estate. And it's something that we obviously look at, a lot in that sense. And we definitely position a lot of our clients towards, looking into Africa, into the Caribbean, and of course in the Middle East as well, because it's a lot cheaper to get, a decent sort of size property out there. And in terms of returns, you're looking a lot more than what you could get, here at the moment, and of course, we'll need to go through, stuff in detail. I'm not just going to throw out numbers in the air, but you're looking significantly a lot more, return on your investment, especially in places like the Caribbean, Barbados, Guyana. Those sort of places are really good. In Africa as well, as I said before, Nigeria, Ghana. It's obviously the know-how. You've got to know what you're doing, and working with an expert, that kind of understands that market can definitely position you for some great opportunities out there.
So I think what would worry me is probably the management of any investment that I had over there. How would one cope with that?
I mean, it would worry you because you're not aware of the industry and what's happening out there, and you'd be very surprised to learn how efficient the management and things are, over there. And you hear a lot of horror stories and things, but unless you actually are in the know, then you wouldn't actually understand how, structured, professional and efficient, property management is out there. And there are many people who do it here in the UK. Many people have been doing it for years, investing out there in terms of Africa, the Caribbean, also the UAE. And it's kind of removing this sort of scaremongering concept that's been there in regards to investing outside of the UK, because there are some amazing opportunities for people out there.
Yes. Well, I know I've spent some time in the Caribbean in the past, and I mean, management structures out there are particularly good in terms of investment, and also the legislation is quite good too. Indeed. I don't know whether that's a spin-off from Barbados being part of the UK at one time, but I mean, our property laws are very good and safe, and are an incentive to invest here, and I think Caribbean is probably a little the same, isn't it?
Yes, indeed, I agree. I definitely agree.
Yeah.
I agree.
What are there any difficulties in terms of exchange controls either way? So in either putting your money into these countries or perhaps getting it out if you sell, more importantly?
Yeah, I mean, of course, I would always advise everyone to do their own due diligence, and you can't just make a blind investment, especially when you don't live there or you don't have an understanding of how the legislations work. And this is why you would need to work with an expert who understands that market and is able to help you facilitate the whole process and explain it all to you from the beginning and the onset of, how it would work in terms of first and foremost acquiring a property, if you wish to rent it out, how that would work. And of course, if you decide to exit and sell off, how does that all work? And it's just understanding, really, Stephen. That's all it is. And I guess that's something that, we have been fortunate to bring to some of our clients, is that understanding.
I'm sure you do that very well. I was always taught to always look at the exit first rather than the entry. Getting in is very easy. Getting out really is not always that good, is it? Yeah. But there we are. Yeah. Okay, no, thank you for that. Very good answer. Thank you. Byron, your second question. The Commercial Rent Act 2022 helped resolve certain remaining commercial rent debts accruing during the pandemic. The closing date is the 23rd of September and to refer to arbitration by the 26th of August at the latest, as the pre-arbitration steps can take up to 28 days. Do the panel expect the arbitration process to be extended by the government? Now, could I ask, Byron, just before you answer that as the question, could you just give us a little bit of background on the Act itself?
So, March 2020, COVID arrived. Government brought in emergency legislation and basically put a ring around all commercial businesses and said to a commercial landlord, you can neither demand payment of rent or take possession of a commercial property for non-payment of a rent. So if you're a shop and you haven't paid your rent, you're protected in this period. And they created a piece of arbitration that said you would, if either side can't negotiate and agree on a repayment plan, bearing in mind the government's recommendations were to a landlord, you should write off all arrears or in part some, which I thought was a bit negative as a starting point for a landlord.
A bit hopeful, I think. Some of our landlords.
So then if you weren't able to negotiate, then either party could elect to go through an arbitration process. And the arbitrator would be independent. The arbitrator would be a panel, and that panel would be, for instance, the Royal Institute of Chartered Surveyors, or RICS. And there are others, and that panel is elected by the government, so it's independent. And there is a process you have to go through, and the key thing was that there's no final act to say it's a 4-week window, because the start process is you would write. So if I was the tenant, I'm writing to you, Stephen, as the landlord, by saying, look, we can't agree on these arrears. I've given you my turnover, etc., and what I'm doing. I'm going to have to elect to go through the arbitration process. You then have a set amount of days, 14 days, to write back to the tenant to say, okay, well, let's do something, or okay, we're going to go through the arbitration process. Then the arbitrator receives the case on behalf of the tenant and the case on behalf of the landlord. And the arbitrator then has got to make an independent view on that to say, actually, first of all, you can't just elect, and this is for a commercial landlord and or a tenant, you can't just elect to go, oh, we're going to arbitration. You've got to qualify for it. So think of a big high street retailer. That big high street retailer would not be able to go through an arbitration process, because the arbitrator will go, you've got sufficiently deep pockets to get through this. I hear that you're furloughing your staff, etc., but X, Y, Z. So therefore, your application is struck out, and therefore you need to go back to the landlord and negotiate. So that's the arbitration process, and that's the ring fence around this piece. So going back to the question from our viewer, and that is, we're coming to an end of that. So the guideline is 23rd of September of this year. What the government said was arbitration would fall away, which basically means that there'd be no protected period for a tenant. The viewer asked if we believe it to be extended by the government. No, I don't foresee that happening, if I'm honest. And I think that the reason for that is the government have pumped in 60+ billion into the UK in the pandemic to try and keep businesses going, to provide bounce back loans, the furlough schemes, etc. Landlords are, if not the biggest unsecured creditor in the UK, and the pandemic exposed that. And I think there is a point now where the government will say, we're 2 years on from the pandemic, or when the pandemic came in to us. We're now at a point where most commercial landlords and tenants will have negotiated on the arrears. 29th of September is the quarter date for the next quarter of rent. I don't foresee the government extending this legislation. I think we'll see 23rd of September, the government will take the arbitration process away. I mean, I don't know, generally, I don't know many arbitration cases, because both sides have just elected to go, let's just talk. And they've got through it.
Well, I think that is one of the pluses of what's happened over the last 2 or 3 years. Is look, there's been a lot more interaction, hasn't there, between landlord and tenant, and that's not necessarily a bad thing.
Oh, it's been excellent. I mean, we go back to legislation, in the 2014, where the ability to collect service charge through an enforcement route for non-payment was removed. So that started a landlord-tenant, dialogue, because it took away a landlord power to enforce without the application through a court process. Probably a bit too technical to get into that now, but in terms of how that looks going forward, if we look for positives as we try to on this show, it's not all bleak, is that the pandemic has created more open dialogue between landlords and tenants. My concern is the stability of tenants at this moment in time. Anyway, we mentioned at the beginning of the show in terms of financial distress, etc. I think cost of living, that crisis, we're going to see a completely different landscape again by the end of this year, on the basis of all these businesses. I mentioned, in terms of construction companies, hospitality is going to be again penalised. I was only on, I think it was Sky News yesterday. I picked up they were interviewing two landlords of successful country pubs, big beer gardens, etc. And they said they got through COVID because they could do takeaways. Cost of living is going to, so they're looking now at reduced trading hours again. So it's going to be difficult.
Well, again, on the TV this morning, they were interviewing various pub landlords who are saying, their heating and energy costs have gone from £500, £600 a month up to £5,000 or £6,000 a month, and it's just unsustainable.
Yeah,
so,
and what we have to take into account, these businesses are already carrying debt.
Okay, well, look, that's all we've got time for in this show. So a big thank you to Noah Laguda. Thank you for coming in, Noah.
Thank you, Stephen. My pleasure.
Byron Crellin, thank you for coming in. Good to see you as always.
Thank you.
Join me again next time on Property Question Time, when we'll be answering more of your property-related questions.